Do you have a retirement portfolio strategy to support your retirement lifestyle needs? What happens when one spouse passes away? Should the surviving spouse retirement needs be prioritized over the distribution to children? How can your remaining CPF monies be used for charity and philanthropy purposes? We will be inviting a panel of speakers to tell us more of this. We have with us Mr. Isaac Loh, Principal Partner in Avallis Financial. Mr. Loh has 34 years of experience in the financial advisory business. He focuses on preserving family harmony and wealth for future generations, using a family trust and multi-generation wealth transfer strategies. Ms. Charmaine Leung, Managing Director of Community Chest and Group Director, National Council of Social Service. As one of the main personnel in Community Chest, Ms. Leung is key in steering and growing Community Chest efforts in engaging the community to bring collaborative and sustained positive impact to the social service sector. Mr. Alan Wong, Principal Consultant, W3 Consultancy Pte Ltd. Mr. Wong provides training and consultancy services in the specialized field of business protection planning. He has trained private bankers, insurance specialists, and financial consultants. With more than 25 years of experience, he focuses his practice on estate planning for business owners. Mr. Alfred Chia, CEO, SingCapital Pte Ltd. Mr. Chia's insights and perspective on various financial matters are regularly interviewed by various media channels, from the newspapers to the TV. He has authored 3 books on holistic financial planning towards financial well-being. He was conferred the designation of IBF Fellow by the Institute of Banking and Finance Singapore in 2020 for his significant contributions to the financial advisory industry. So let's welcome the speakers, please.
Good afternoon, ladies and gentlemen. So quickly we have come to the end of this wonderful forum. And to close it all, we have this wonderful panel of speakers. What I will do is to just ask each one of them to say a few words concerning their various areas of expertise and areas of focus. And then when we have time towards the end, then we will just answer those questions. So keep those questions coming. In this day of pandemic, if anything else, it throws up a lot of inequalities. So those who have, giving to those that do not have. And what more fitting example than our Community Chest. So today we have Charmaine from Community Chest. So I'll just ask Charmaine to say a few words to introduce us to Community Chest. Charmaine?
Thank you, Isaac. Hi, good afternoon, everyone, and thank you for having me here today. So I'm here to tell you a little bit about Community Chest. Really, Community Chest is the fundraising and engagement arm of the National Council of Social Service. I'm just going to bring on some slides and to be able to take you through some of the work that we do. And really, our one purpose is to bring resources to the social service sector. We have 5 causes, which I'll go into a bit in a while. And we are in 38 years of service. We support more than 100 charities, or what we call social service agencies. And we serve about more than 200 critical services. And 100% of our donations go to the charities. So we are, in a way, a fundraising, sort of a aggregate fundraiser. We don't fundraise for ourselves, but we fundraise to support the social services. The causes that we are fundraising for, some of which would be children with special needs and youth at risk, adults with disabilities, families in need of assistance, persons with mental health conditions, and seniors in need of support. So these are 5 causes that we work around, and within there could be different types of programs that we help. So for example, it could be counseling for persons with mental health conditions. It could be befriending service for seniors in need of support. So those are just examples of programs that we fundraise for. And as Isaac has said earlier, we all know that even in peace times, it is very, very important that we help those those who are more vulnerable amongst us. And what more during this whole period that we've seen, in the past 18 months, close to 2 years of pandemic, where we really saw the inequalities really showing up, and how certain populations are much more adversely affected than others. There are many different ways of giving to community chairs, one of which is using a CPF nomination, or also by bequesting to community chairs a life insurance nomination, or even something as simple as contributing regularly on a monthly basis. It could be $5, $10, and that could also be one way of contributing to the society. 100%, I said earlier, of the donations are given to the charities. That's because our fundraising and also operating costs are mainly covered by the tote board. So that allows us to say that we do not take away a certain amount for administrative causes, and we're able to channel all that you give to the charities. So the impact of donations, some of the impact which we are very accountable for the different 5 causes, for example, would be shown. We will prepare an impact report to talk about how we've helped the different causes that we say we are fundraising for. And that is something that we will always answer and be accountable to our donors. So this is a report that comes out once a year, where we will actually mention about where the monies that we've collected have gone to help in the last year. And so, really, in terms of how we can plan your gift, for example, in this forum, we're talking about CPF savings nominations. One of the ways you can do is to actually make that nomination and give it to a charity. So in this case, community chairs, for example, you can make an appointment with the CPF office. And then when you are going for your appointment to one of the 4 service offices there, then it's about bringing in the UEN of the charity that you want to give to, and then the customer service officer will assist you when you show up for the appointment. And we've also, if you bring along a witness, but if you do not have a witness, actually we've also have instances where actually the CPF officer can be your witness. So that's an example of how you can actually do a CPF savings nomination. So I thought I'll hand it back over to Isaac, just a little, to tell you a little about what we do in community chairs. Thank you.
Thanks very much, Charmaine. We heard so much about CPF and retirement and so on. We also talk about nominations and what's covered, but maybe we may not be so clear about what's not covered by the nominations. And also this segment, we want to introduce some ideas and perspectives that are probably not covered during the previous session. So I have Alan next. Alan will tell us a little bit more about his area of specialty in the area of what is not covered by CPF nominations. And Alan's specialization is more in the planning for business owners. So I thought that perspective might also help us. Alan?
Thank you, Isaac. Good afternoon, everyone. I would like to cover 4 points about relating to CPF nomination. First point, I personally like the idea of the 1M65 shared by Mr. Lu yesterday. Now, what happened is that if you have accumulated so much in CPF, please consider how to do your nomination. Now, please ask yourself whether your beneficiary is ready to inherit so much, or your so-called nominee is ready or not. Now, instead of directly nominating them, why not consider a trust that was recommended yesterday? Next, having a sole nominee in your CPF nomination. Now, let me just share an example. Now, let's say a couple, husband and wife, and they have young kids. Now, what happens is because the kids are young, so what they do is they nominate each other as the sole nominee of their CPF nomination. Now, what will happen is, what happens if it's in a freak accident, both of them were to perish together? Similar to what Mr. Lu shared, what if they perish together in an accident? Now, what will happen is that the older person will be deemed to pass on first. All right? So what will happen is that for the older member, what will happen is that his CPF will be made payable to the younger spouse. Now, next, what will happen is because the sole nominee is no more around, now what will happen is that you'll fall under ISA, Intestate Succession Act. Now, so you have to ask whether does it make sense to you. Now, in order to overcome this problem, you may want to consider this strategy that I call it 99-1%. So what happened is that you can nominate, yes, you still can continue to nominate your spouse as the one of the sole nominee, but what happened is that nominate just up to 99% to your sole nominee. Next, have another nominee on standby. So what will happen is, in the event if these sole nominees are no more around, the 99% will fall into your 1% surviving nominee. So it can be someone that you trust, or next, why not consider another type, the same thing again, a trust. All right? Third, take note, CPF are not covered under CPF nomination. Sorry, CPF IS are not covered under CPF nomination. So what will happen? It will fall under your will. So please provide provision for your CPF IS. Next, now, your CPF funds are protected from creditors. Now, whether you are individual or you are a business owner, what happens is when you are declared a bankrupt, whatever you have will be taken away from you, except CPF will be protected. Now, whatever you have utilized for your CPF IS, it will be still protected, but you can't invest further. Next, as a bankrupt, what happens is all your things are taken away by your OA, not ordinary account, but official assignee. Now, what happens next is, with your funds in CPF being protected, you still can utilize it to actually purchase a HDB for yourself even though you are declared bankrupt. Next, you can actually utilize the funds for your kids' education or your own education locally in a tertiary institution. All right. Lastly, medical care. Now, at least you still have your MediSave to take care of your basic medical needs. So do consider all this point, and please reserve more money in your CPF. At least it will be your reserve fund in the event if you are declared a bankrupt. Thank you, Isaac.
Thanks very much, Alan. I think that was a very good strategy. If you use the CPF nomination and then your nominee is not around or predeceased you, Alan's idea was 99-1, so that the amount will go to the 1%, which now inherits the 100%. So if you've got 3 children, then maybe it's 97-111.
Yes.
Right? So if the spouse passed away, then at least the 3 children will inherit equally. Or if you can put 96-211, if you want to give more to, say, maybe your son, or maybe a favorite daughter, or maybe there are no favorites. Okay, I think going along with that, the last 1.5 days, there's a lot of strategies that was being shared, and sometimes we're a bit confused, and also in a way we need to know what we can do. So I just want to turn the time over to Alfred. If you were you, what are some of the strategies that you think are most applicable, in terms of all we have shared in the last 2 days, or 1.5 days? Yeah.
Oh, very good afternoon. Thank you, Isaac. Yes, I've been in this financial advisory, and CPF is definitely one of the very important segments that we advise our customers. So having been in the industry for more than 28 years or 29 years, I already lost count. I've definitely witnessed firsthand how people actually perceive CPF and how CPF have also evolved and improved their policies, which is why now we are all talking about how we can better make use of our CPF. On that note, I must congratulate Precept for organizing this event. I think the management and staff have put in a fantastic job organizing so many different speakers to actually share so many great ideas, how we can actually better use our CPF, especially Mr. Lu talking about how to become a multi-millionaire using CPF. Well, I'm sure that is very inspiring. Now, at the same time, there are so many ideas. So which one is it that you should adopt? I think that is a very important part, is how do you actually contextualize? If you are in your 20s and 30s, it's going to be a different strategies from someone who are 50 and 60s. Some of those ideas that was mentioned, I wish I can reverse time and go back to when I'm younger time, so that I can actually make use of those ideas that to actually accumulate, increase my CPF. Then at the same time, of course, there's talking about using CPF for housing. But actually, housing in Singapore if you are talking about HDB, it's definitely something very affordable option. In addition, HDB actually provide a lot of grants to actually enable Singaporeans to actually own their flats. Because property ownership is definitely one very important thing. Not only you have a roof over your head, but it's really a very strong way of enhancing your assets. And if you can actually pay off your loan before age 65, although prudently we will advise you to actually do it earlier, you can actually have more options. And you can do things like right-sizing your property. Yes, I mean, especially when we are in our 60s, 70s, and we have no more strength of climbing two-story kind of a mansionette or even a landed properties, I think it's the right time to right-size rather than look at it as a downgrade. Because right-sizing to the property that would actually suits our needs, and we have more money for our retirement needs. Okay, so I think actually, of course, CPF is a very complex system now. It caters to so many things: housing, education, medical, investment. But I think at the end of the day, one thing to focus on: retirement. How to better make use of CPF to actually facilitate our retirement planning. All right, back to you, Isaac.
Yeah, thanks, Alfred. I thought that was a very good summation of some of the points that were shared. Just shifting gears a bit now, is passing on our wealth. Some people neglect passing on the wisdom of years. Besides passing what you have accumulated over the years, what about the values besides the valuables? What about the values that you can pass on to the next generation? So I'll just circle back to Charmaine in terms of com chairs, in terms of those people who have contributed, and what are some of the values, what are some of the benefits besides just passing, helping, knowing that you have helped someone who has needs. Yeah, maybe Charmaine can tell us, and also afterwards the other panel of speakers can tell us a little bit about how some of the application of these actual processes and what they have just shared with us. Charmaine?
Yeah, thanks. Yeah, indeed, I think passing on wealth, or what we call legacy planning even, in terms of how we want to use, the monies. Maybe for me to illustrate it by telling, one or two stories about how we have actually encountered donors who plan the way that they want to use their money even after they have passed on. So for example, we had a donor who came to us and actually wants to set up a fund that will be managed by the children and later on the grandchildren, to be able to address and tell us specifically what they would like to do year on year in terms of the money they've set aside to actually benefit the social service. So this would be something that the person has already dedicated this fund, and they've passed on, and they've got their children to come in, and we will review with them the program. So we treat it like a typical, normal donation, where we actually will do the review with the family, and to say that this year this is the sort of impact that's made. What are your thoughts, and what would you like to do next year? And then we will actually adjust that as well, and to be able to then reach out to the sectors or to help the segments that the family wish to. So in this way, what you've done is actually you've passed on those values of giving also within the family, and that's something I think important to consider beyond thinking about just passing on money, because this is also, as you are, passing on that value, you are growing that whole mindset of generosity amongst your descendants, and this also then, of course, last but not least, really helps to secure the future of the charities that you are supporting. So that's one example that we find it's very heartening that people actually are approaching us to do that, and we then become the advisors to be able to help facilitate that. Yeah.
Yeah. Okay. Thanks, Charmaine. I really like the word generosity that Charmaine mentioned. The value of generosity, of ensuring that our generation, the next generation, always remember and always be generous. Then we build a kinder society. We surely need a kinder society as we go along. We turn to Ellen next. Maybe Ellen has got a lot, I'm sure, some stories to tell us concerning some businessman stories, some values perhaps that they can pass on. I think for business people, the key is industry. They work very hard, and sometimes they forget to plan for their own health. Sometimes they forget to think of passing on to the next generation this importance of working hard and so on. But Alan's got some story to tell us. Yeah.
Thank you, Isaac, once again. All right. Okay, let me just share one story. I know of this ultra-rich individual who was declared bankrupt. Now, what happened is that he has utilized all his CPF money for his private property. Now, as I mentioned earlier, when you are declared a bankrupt, everything is taken away from you. Now he has to either rent or stay with someone else. Now, if he have this reserve fund in CPF, at least he will still have a roof over his head. All right. While you're planning about your retirement, I also want to talk about a bit on business succession planning. Now, what happened is that business succession planning is similar to retirement planning. You have to start early. All right. Don't wait until the last minute before you decide how to plan. Number two, business succession planning is just similar to your CPF nomination. Please consider whether your beneficiary is ready to inherit your business or who are the people to succeed your business. All right? So plan properly. Third, now, the last one is protecting yourself. Now, while I was saying that CPF is protected from creditors, what about your business? What about your personal asset? Have you created strategy to actually protect your personal assets? Now, if you are not aware of this, you can actually create many strategy to protect your personal asset. Now, you can talk to an estate planner, or either you can contact me where I can share with you the strategy how to protect your asset. Now, let me hand over to Isaac once again.
Okay, yeah, thanks, Alan. We turn now to Alfred. Alfred is a CEO of a financial advisory firm, wealth planning and so on, but he also comes from a background that's very much involved in real estate. So maybe he's got some story or some advice to tell us concerning this whole area where it's related to the real estate industry. Yeah.
Oh, no, I mean, of course, to contextualize actually what was been discussed in these 2 days, right, or 1.5 days. How do we actually help? How do you actually use CPF to actually plan better for yourself? I mean, I would say there are two broad categories, right? Salaried employees and self-employed. Especially for the self-employed, that is the group that actually I'm concerned with, right? Because for the salary employees, as long as you work, there's a constant contribution to CPF. You can actually deploy many of the strategies that was being discussed in this 1.5 day. But it's the self-employed that actually you do not contribute to CPF, or you just do your minimum MediSave contribution, then you will be missing out a very fantastic way, okay, of leveraging on the CPF scheme. And of course, if you want to use your CPF to purchase your property, then this will be something that you will not be able to actually take advantage of. For example, because of the HDB that actually grants that government actually provide, for young couples, right, both husband and wife, as long as they've been working for about 3 years, they could easily afford a 3 and 4 room, right, HDB flats. Now, imagine you just need to work for about a few years, contributing to your CPF regularly, and you have that ability to own your properties in a few years. I mean, it's really something that many other countries, they are envy of us, right? So at least you have this, put your foothold into something where you can actually take on. Okay, so for the self-employed, I would really urge for you to really prioritize your savings to put into CPF contribution. Consider things like voluntary contributions, where you can then actually take advantage, right? I mean, at least put yourself to be able to benefit from the CPF schemes. And you can also enjoy tax relief at the same time. And it's really a form of forced savings. And you can use those savings for housing, retirement plannings, medical insurance, buying insurance like CareShield, not only for yourself and for your immediate family members. So that is really what I would really like to urge, right, for the self-employed to consider this as a very important financial plan.
Yeah, thanks, Alfred. There was a session on the gig economy, which is becoming a very important segment. So I think planning for the self-employed especially is quite important. Maybe we take some questions here. Charmaine, there's this question concerning nominations to charity as opposed to community chairs in this case. Can it be done online, and who are the appropriate witnesses?
Right. So I think for CPF, if we are talking about CPF savings nomination,
That's right,
it actually, today, I think you can't do that online like your normal nomination. So what you have to do is really to make an appointment in advance with the CPF office, and then actually show up in the office, then be there with the witness, and then do that nomination there. So that's what you have to do.
Okay, so you still have to make a trip to the CPF office. Let me draw on Alan now. Alan, the question, I think there's some interest in the 99-1 strategy that's being used. Yeah. Okay, can you elaborate? Yeah.
All right, I came up with the 99-1 strategy. Basically what happened is that it's always a concern for a couple, what if they perish together? But the next thing is the 99-1%, the 1%, I will try to avoid putting a child or a minor to inherit the 1%. See, what happened is that generally I don't like the idea where the money is transferred to the public trustee. All right? So for minor, it will be transferred to the public trustee. Now, in order to overcome this, I came up with the 99-1. So the 1% today, what happened is that the surviving nominee will be the one inheriting the 99% in the event both parties passes away. So what will happen is that today, one of the best strategy now is to consider using Provi Trust, which is shared yesterday. All right?
Okay. Yeah. Okay, let me also just take this question on trustees. It says here, if a trustee is identified and the person passes on, or if the corporate trustee go bust, what happens to the trust funds? I think there's a bit of concern over the last 1.5 days about the trustee not being around. So there was the advice, first of all, trustee, we can appoint a corporate trustee, so the corporate trustee won't pass away like a natural trustee, natural person. So but in the case of a natural person passing away or the corporate trustee going bust, you can always appoint another trustee. Your trust funds will remain intact because the trust funds are supposed to be held in trust for the beneficiaries, and the trustees are not going to use the trust funds. The trust funds will be there. You need to just change to a different trustee. I have another question here. I don't know which of you would like to take it. It says here, for elderly parents entering into dementia problem, what should they do for their CPF monies? Okay, apart from the Provi Trust, which is a very good solution, maybe anyone you want to add. For elderly parents entering into dementia problem, what should they do for their CPF monies?
Maybe I can take
Sure.
that one. Which is why in the last 1.5 days, I think there's many speakers that actually talk about doing LPA. I mean, of course, if you have done your lasting power of attorney, when you are of sound mind, then this problem will not actually become a problem. But it will become a problem if, let's say, this person did not do any of this LPA. So then the beneficiary or the family members would then have to apply to court to apply for deputy. So the whole process is going to be very long. I mean, I've definitely have seen my friends and customers who have actually been through that kind of troubles and hardship. It's really not easy. Because imagine, not only you have to take care of your family members who have actually lost a state of mind, you still have to worry about all the financials. So which is why it's very important to make your plan while we are still of sound mind and good health.
Okay. I think the LPA solution is a very important one. The government has been trying to encourage this for quite a while. This is a very good scheme for, when the government introduced something like this, because they see that this whole issue of dementia, Alzheimer's and so on is going to be quite a big issue in Singapore. That's why we have Care Shield and before that Elder Shield. And all this is to anticipate some of these impending problems. So do your LPA. If you have a more complicated estate, then you can come to precepts. Besides the easier version, there's a more complicated version, and precepts is known for being very, in fact, they are known as the expert in this area. So that particular LPA form, the complicated one, complex one, has already been approved, so to speak, in terms of the wordings and so on, the format and so on. So let me just do a bit of marketing for them. So LPA is the answer for most of us, or people like myself, if you have of a certain vintage, anyway, this is a good time to just go and consider doing an LPA. Okay, maybe I just take this question very quickly. Can I nominate my good friend as my trustee? Must it be a professional nominee trustee? Must it be a professional trustee, right? Can I nominate my good friend? Answer is yes, but actually it's not advisable. Not advisable because your friend is not a professional trustee, and in fact you are, depending on the complexity of your trust, you may be saddling him with a lot of issues, and then he may have a lot of liabilities in future. The beneficiaries can actually come after him if he did not execute his duties properly. And also, in the case of an individual trustee, there's a potential of this person predeceasing. So it's advisable to use a professional trustee. All right. Another question here. Can you share what are the best ways in selecting a reliable and trustworthy advisor for setting trust and investment relating to CPF? Can you share what are the best ways in selecting a reliable and trustworthy advisor for setting up trust and for investment relating to CPF? So I think there are two parts to it. First of all is the trust, second part is the investment advisor. In terms of an investment advisor, I think we have heard quite a lot over the last 1.5 days. Offhand, I can remember today alone we heard of Endow Us and also Money Owl. I think those are two platforms. They are called robo-advisors. Those are platforms you can consider. And of course, there are a lot of financial advisory firms around that you can consider. But the second part about selecting a trust, anyone want to take that on?
You want to take on? I've covered the bankruptcy.
Best way of selecting a reliable and trustworthy advisor for setting up a trust.
Okay, so actually, yeah, that's why when you talk about trust, right, people always ask, can really trust or not? Because actually, trustee is a very important role, like what Isaac mentioned. Yes, you can appoint your friend, your good friend, but then maybe after your good friend become the trustee, he will no longer think you are a good friend because you sabo him. Because when someone have to take on this, there's a lot of responsibility to take on. And if you even want to get a friend, you should also get at least two. So this is one of the things to look at. But ideally, right, you should get someone who is running this professionally. And more importantly, in Singapore, to be a trust company, you need to be licensed by MAS. Because MAS is very particular. We want to make Singapore also a trusted trust hub, where people can actually come here and create trust, not only for the locals, but for the foreigners. So one of the things you should be looking for is this trust company or this professional trustee licensed by MAS. That is the most fundamental things you can look out for.
Okay. Anyone wants to add to that? Okay, there's a question for you, Alan. As a business owner, in the event of bankruptcy, all right, business owner in the event of bankruptcy, CPF money which has been used for private residential property, will it go back to the CPF ordinary account after it's sold off?
The answer is no. It will not be protected. All right. Only your funds inside CPF will be protected, or you have utilized it for CPF IS investment will be protected. Take note of that.
So that means the money that's been used for private residential property, what will happen?
It will be auctioned off.
Auctioned off?
It will not be returned back to CPF.
I see. So you will lose your house, you will lose your money.
Yeah.
Okay, that's why the idea of a trust is very important for business owners especially. Yeah. Okay.
Maybe Isaac, just to add on. Okay, because when you take a loan from the bank, there is this thing called priority of claims. So bank will have the first charge. but CPF is a second charge. CPF is a second charge. So actually, if you have been using CPF for the property, so after the bank auction off the property, because now this person is facing bankruptcy, right? Because the bank need to recover the loans. So the first amount will have to go and settle the bank loan. And if let's say there's still balance, the money will go back to the ordinary account based on the amount that you have withdrawn for the housing, because that becomes a second charge. Then the other creditors will then follow up from there, right? They'll take Q number, right? So that will be the 5th and 6th charge onwards. So again, this is also another assurance, right? How you can actually, when you use CPF to purchase your property, in an indirect way, how it can be actually protected.
Okay.
But if they are declared bankrupt and if the bank has the first right to it, then nothing will be refunded back to OA, right?
If let's say after sell-off, there is no more money.
Yeah.
There's no more money.
Yeah.
So be very careful when you want to borrow money, whether it's for your property or for anything, right? I have a maybe just pivot to ComChest again, because we're talking so much about property. Besides your CPF and obviously cash, what about donations in kind, such as maybe even a property? You know, someone who owns a property but they have no dependents and no, and then they're just thinking, is it possible to give property to ComChest? Yeah.
So yes, indeed, we've had various instances of people donating their properties to community chest. And what we do is that we will work with the donor at that point in time, whether they're donating a property, we should sell it off and use the cash to put it into the charities, or to consider how we can hold the property. So it's an arrangement then we will work out with the donor, and to also respect donor intent on how they want to do that. So this would be, quite a bit of a case-by-case basis as well, because I think donor intent is important, and we want to make sure that we can, have the best use of, the resources.
Okay. Yeah, in the remaining time that we have, time is flying so quickly. I just want to ask each of the speakers to just say, in their various areas of concerns, they have been doing this for so many years, and let's just step on their years of experience and professional advice. What is the what is the one thing that you want to tell our audience in view of this whole area that we're talking about? Retirement, CPF nominations, estate planning, transfer of wealth, transfer of values, and so on. What is that one thing that you want to leave with our audience? Yeah, maybe this time we go the other way around. We start with Alfred. Your parting shot, as you were. Yeah.
I think, like what I mentioned, the way people look at CPF now is very different. We are now talking about how to actually make good use of it, how to leverage on the different CPF schemes, from protecting, if let's say someone is to make bankrupt, from how to actually accumulate your savings and how to actually distribute it. Of course, one of the things that was not really mentioned much is about the insurance that actually you can use your CPF to leverage on, right? Such as your MediShield and the integrated plan and the CareShield, right? Which Isaac mentioned, right? For the long-term care. So these are the insurance that actually you can make use of your CPF to actually make premium payment for it. So whether you are a salary employee or as a self-employed, really, you must understand all these schemes. And if you have missed these events, I think you should ask your friends to try to contact Precept to watch again so that you can get all the right information and do the right plannings. And it doesn't hurt for you to talk to a trusted financial advisors so that to get some confirmation what you have actually understand and how you can actually use all these strategies to make the plan work for you.
Okay, thanks, Alfred. Alan?
Okay. Now, I, for one, believe that CPF, we have one of the best systems in the whole world, honestly speaking. Now, but what happened is that with this good system in place, the next thing is about your retirement planning, using your CPF for your retirement planning. Same like what Alfred have shared. Talk to the right person. Talk to the trusted financial advisor. Now, relating to transferring your CPF to your nominees, talk to a trusted estate planner. Right? With that, I think there's the two things that you should consider with regard to your CPF.
And I think for on the giving part, I think we should maybe look at this as a holistic planning. So if you're planning, your legacy planning and how you're going to distribute your wealth or whatever you've accumulated to your families, and after you've taken that, that approach and provided for your families, consider what else you want to pass on that could actually go back to the society in the name of, doing good deeds. And then to see how that can be seen as a way of passing on the legacy of building generosity, passing on those values within your family. And that may be a way to approach it, and to see how then, whether it's be it the CPF contribution, the nomination, or your own legacy planning of your cash and estate, and that thinking of how it can also benefit the society.
Okay. Thank you very much, speakers. Let me also just say a few words for my area of focus. I think just riding on what Charmaine has said, I think of Singapore in terms of the number of wealthy people. We are one of the countries in the world where there's so much wealth. What we have as well as so much wealth that's coming to this country. But for us as Asians, I find that we have a saying that wealth does not last 3 generations. And there's a reason for that. Now, typically, because the wealth, when it comes to the 3rd generation or so, typically there's no connection between the 3rd generation or even 4th generation with the original people that, whether the patriarch or the matriarch or that created the wealth. And so there's this dissipation of control, dissipation of harmony. So what we want to do is actually, if we can, preserve harmony and wealth for future generations in terms of the companies, the operating companies, the successful companies in Singapore that's been around. We find very few 100-year-old companies, for example, that are still in the hands of the original founding families. And if we can just preserve those companies, preserve the wealth, and in terms of preserving the harmony in the company, in the business, and ensuring that this wealth is continued for many generations to come. And each of these families is very, very common to have them want to think of giving back to society. When they do that, right, can you imagine the amount of wealth that can be used for charitable purposes? And then if we have people who are bankrupt, or unfortunately the business owners that don't do so well, those have done very well. Those business owners can actually do a lot of philanthropy. They do today in Singapore. There's a lot of mentoring going on. People wanting to give back, wanting to help entrepreneurs and so on as part and parcel of what they do for society in terms of giving back. Also in terms of in the area of property, I'm thinking of people without homes, homelessness. Singapore, we don't see so much, but all over the world, there's so many needs. If we can just preserve the wealth in this country, we can just preserve the family harmony in this country, and then if we can just give to those that have need, I think we have done well, especially at this time of pandemic. While we take care of ourselves and our families, we also want to think of those who may not have as much as we have. I like to say that sometimes people say we are all in the same boat. Actually, we are not in the same boat. We are in the same storm, but each one of us got different boats. So I want to take this time to thank our panel of speakers for taking time off to come and share with us their insights and their perspectives. And I'm sure you have benefited. And we have come to the end of this session. So I just want to thank each one of you, and I hand the time back over to the organizers. Thank you.